Hello, this is the Daily Forex Report for November 2nd. We're going to look at the US-Japanese yen pair first. This pair created an inside bar today, having a range that was inside the previous bar's range. As you can see, it did close up. However, it is moving sideways with a bias that is still slightly down. Look for it to potentially go as high as 81.29, possibly as low as 79.96. Look for some resistance around 81.05 and look for some support around 80.25. Now the Euro-USD pair, this pair moved to the upside, moving sideways, biased is sideways. Look for it to potentially go as high as 142.01, possibly as low as 138.13. Look for some resistance around 140.75 and look for some support around 139.50. Okay, now the pound US dollar pair. This pair closed higher, did have a fairly large range compared to the body, so we could get a reversal. Didn't break the previous session's high either. We are looking for this pair to overall continue moving sideways. Look for it to potentially go as high as 161.58, possibly as low as 158.88. Look for some resistance around 160.90 and look for some support around 159.75. Now the US Swiss, this pair closed down, been moving sideways about the past 5 sessions. Overall it's been pulling to the upside. Previous to that, we are looking for it to continue moving sideways, possibly moving up to 0.9986, possibly down to 0.9637. Look for some resistance to hit around 0.9975 and look for some support to the downside at 0.9750. Excuse me. Now, as far as news analysis go, we have the U.S. ISM non-manufacturing composite for October being released at 10 p.m. or 10 a.m. rather Eastern Time. Consensus on that is that it's moved higher from 53.2 to 53.5. Overall, not a very strong news announcement. However, we do have a very strong news announcement, probably the largest news announcement there is, and that is the FOMC announcement for the U.S. dollar being released at 2:15 p.m. Eastern Time. Consensus on that is that they're going to hold rates at 0.25%. Now, in light of that, as far as what I'm looking to do over the next couple hours, go to the Euro-USD. And on the hour time frame, you can see that the market has already started to move sideways to a large degree. What I want you to do is to go ahead and put on your indicator, put on a moving average, just the canned moving average, set it to, say, 5 periods. You can set it 3 to 5, somewhere in there. Simple. And you want to set it to the high, and then you want to put one on there that is set to the low. And what this does is give you a range that you can buy and sell from. And over the next several hours, due to the FOMC announcement, the market should, for the most part, move sideways. So that's what we're looking to do. When it breaks above the upper band, looking to sell, and when it touches the lower band or breaks the lower band, looking to buy. And then just repeat that process over and over. You can see already we have 1, 2, 3, 4 times this would have occurred already over the last few hours. Kind of what that looks like from here to here. You're looking at about a 14 pip move, a 9 pip move, an 11 pip move, and then once again about a 10 pip move. You do want to use probably the distance between the two lines as your stop loss. So you have a potential 10 pip gain, you want to do about a 10 to 15 pip loss. You really don't want to go beyond that. If you want to change it up a little bit, you can change the length of the indicator. Let's set them to 5 this time and see what this looks like. Introduces a little bit more lag, but nonetheless you can see that it changes it up a little bit, gives you a little bit more room. So here we've got a 21 pip move instead of 14. It also cuts out a few trades as well. That's about a 14 pip move. You can see that there are only 2 instead of 4 or 5 that we had previously. Well, that about wraps us up for today. Until next time, this is Jason Fielder. Good trading.